it was a bit of a head scratcher, Dom. It was certainly not what a lot of us expected, particularly when the CPI data came out so hot, even compared to expectations. But I think investors, or at least equity investors, are now really looking at what the bond market has been telling us for a couple months now, is that they are convinced, or at least yesterday have been convinced, that inflation is transitory, and this is something that we'll be able to overcome. And I think also maybe investors were reassured by the positive job reports, though that report tends to be very volatile. But for the past 2 months, equity investors really have been behaving very differently from the bond market. While yields have been going down, you've seen these equity fears in the equity market really hovering. And I'm not sure that that fear may not come back into the market again. I'm not sure that it's completely out of their system. And so I'm a little cautious that we've really gotten over it, and that the equity markets are confident that inflation is not going to be an issue when it comes to companies being profitable going forward.
We were talking, Aaron, not long ago about rising interest rates over the course of the last 6 to 9 months, and how it's really affected some of the growthier aspects of the markets, especially in equities. We're talking about technology stocks, some of those big names in communications and media stocks that have been higher valuation types, so to speak. And then they get crushed because interest rates go higher. Interest rates are now going lower. So doesn't it stand to reason that maybe we are justified at these levels, and that technology stocks and communications services stocks are the ones that are powering these gains in the NASDAQ all over again?
The problem is that they've done so well in 2020. They really do have difficult comps and difficult hurdles to really achieve spectacular growth going into 2020. When you look at their valuations, people really just piled in. There wasn't a lot of breadth, and these mega cap stocks were really the only stocks that were doing well in 2020. So they do have more difficulty in justifying that type of growth when, one, they did very well in 2020, and two, you've got companies that didn't do so well and are looking at really spectacular growth coming out of the pandemic, this pent-up demand type of trade. So I think it is still very difficult to justify some of these mega cap valuations, and there are exceptions, but in general, I think mega caps do need to come down as we see broader strength across the U.S. market when we have an economic acceleration environment.
So Aaron, if there is an economic acceleration environment, if there's this pent-up demand trade, if it stands to reason that the economic recovery story still has a runway left to go, that we're just maybe in the middle innings of this kind of recovery trade, then where do you go for that kind of value? In the past, it's been the small cap stocks. Is it the same case right now? Is it the reopening trade part 2 or 3 going back into those small caps? Are they the ones that are now due for record highs themselves?
I think in general, yes, I think you're still looking at the small caps really are positioned for the best recovery and for the best type of growth at a reasonable price, even going forward. And even though we've had about 9 months of value outperforming growth and small cap doing better than large cap, I think the trade isn't over just yet, given we've got all of these components that say this is the type of environment where small caps win. And so I'm really advising investors that if they do have an overweight in mega caps, or even if their large cap position has gotten a little overweight, that there's still plenty of time to take that money off the table and transition it into small caps for the next 6 months to a year, because they are the ones that really do look more valuable while still having double-digit growth for the next 2 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.